Steve, I'm going to start with you as an analyst. The stock, as we showed yesterday, already above $20 above Wall Street's median price target for it. Now, some may be higher, some may be lower. That's the median target. Do you remain optimistic on Apple even as it makes new highs day after day after day?
Well, thanks, Brian. Yes, as a strategist, I don't have a formal opinion on the stock, but the chart still looks good. It's beginning to get overbought a little bit. But I think what we saw yesterday was a mix of incrementalism, and you need that from Apple, continue to improve iOS to keep the retention rate of customers high, and then bolder moves like the shift away from the Intel processors. So given that you've got earnings down for a couple quarters, but then re-accelerating with the 5G product cycle, I would expect the stock is still in pretty good shape.
All right, Jonathan, was there anything that you heard that makes you think that there's some sort of game changer for Apple and its customers here? Jonathan? Or maybe Jonathan's on his Mac. Steve, I'll go back to you as well. Was there anything game-changing, Steve, as a strategist to you?
I wouldn't say game-changing, but there are some issues going on. The one that's getting the big headlines, of course, is the shift away from the Intel processor to Apple Silicon, which is based on ARM. The Mac's not a huge part of the company, but it does show that the company wants to continue to vertically integrate and gain control. There is a lot of talk about application developers, some of whom are fairly upset with the 30% take rate on the App Store. European Commission is looking into Apple. So perhaps Apple was fortunate that it wasn't a live event. There was no disruptive application developers in the audience to have to deal with. But, that's an issue that's going to have to be dealt with. And then the fact that this was a developer conference, so you don't expect a lot of new hardware. But the fact is that Apple is going to need new hardware, and we're all waiting for some sort of, virtual, augmented reality headset, glasses. There was talk earlier in the week that that's not going to be out for a couple more years. So there is a bit of a risk that after you get through the 5G cycle here, unless they have a follow-on fairly quickly, the stock could tread water.
Yeah, because and Apple would hate me for saying this, Steve. I think we got Jonathan trying to patch in. Either way, Apple wouldn't like this, but maybe now with 1 billion plus users, for Apple, is it more about just keeping people from making the switch to Android rather than gaining new customers?
Well, it is difficult to gain new customers, although I think they can still take some share from Android. It's really about monetizing the base. They've got 1 billion users. That gives them some optionality. Obviously, they've done that pretty substantially through services over time. Now it's going to be about performing better in services and potentially adding new types of products over time. I think we're all looking for what's the next big thing. And if Apple can be criticized, it's probably in the area of lack of innovation. We saw a lot of incremental improvements yesterday, but eventually you're going to have a big step forward. And that still feels like it's a couple of years away. But it's about monetizing that installed base with modest growth.
Yeah, and as we have showed, the services part of Apple's business on iTunes and iCloud is now larger in terms of revenue than the majority of S&P 500 companies. I think, in fact, Apple's number 2 business, aside from iPhone, is now larger in revenue or the same as Facebook's entire business. Are they going to be able, though, to continue to extract more money from their customers? $4.99 for Arcade, $9.99 for News, $15, whatever it is, for Apple Music and iTunes?
Well, that's a good question. In terms of the phone pricing, it seems like they've kind of hit the ceiling. And if anything, they're trying to bring it down a bit. They're trying to provide financing and alternatives. So on the services side, I think they've still got some ways to go. There is talk of potentially bundling services in a bigger way, maybe even bundling services and hardware and getting a little bit more creative in terms of how people can pay for things. Apple's services execution has been very mixed, unlike on the hardware side historically. So there's still some questions about how are they going to really do with the Apple TV shows and so forth. And now you've got this potential pressure on the App Store. But I wouldn't bet against Apple. Let's put it that way. It's a unique company. The brand is incredibly powerful.
Do we buy this, Steve, as a strategist, very quickly? Because, by the way, I want to know why their email product just hasn't evolved since 1998. Do we own the stock? Do we sell the stock, buy more?
Generally, we're still fairly positive on FANG, and I would include Apple in that. These are the big platform companies. They've got some regulatory threats, but there's really no disruptive technology that's likely to knock them off their perch. And ultimately, that's what gets you in tech. And as you can see, the chart still looks pretty good. So I think the setup is still fairly positive, certainly relative to tech. It's at 25 times earnings, which isn't cheap, but there's a lot more expensive names in tech.